welcome to the closing beat, everybody. Happy, well, it's Tuesday. Yep. I'm just going to quit saying happy. I'm just going to say happy day to you. Hope you're having a good day. If you're not having a good day, maybe you'll take a look at the stock market. Pretty good day in the stock market. We'll cover all of that here. This is our just stock market update show. We cover the good, the bad, and the ugly. We got Charlie back there doing some programming. Not going to pretend there's a guy in the background anymore. And yeah, we just try to cover the, the good, the bad, and the ugly. There's been a lot of ugly lately, so thankfully today we have some good to cover. You may see that on the screen there, but first I want to let you know about a game that we're playing. It's called Guess the Dow. Bottom right-hand corner of your screen. Guess this week where you think the Dow will finish next week, and if you're the closest without going over, we'll give you $100. Simple as that. This isn't like a marketing game where we're going to spam you and everything. The only email we'll send you is if you won, and we'll ask for your address so we can send you a $100 gift card. If you happen to be one of our customers, you can actually just have your account credited, which means, the credits to your account don't count towards your maximum contribution. So theoretically, you can get some more money in your IRA. No games played there, of course. And then, our clients probably have a little advantage because we teach them. We teach them how everything works, but if you want to play along and you're not a customer, no purchase necessary, no catches, no gotchas, no anything like that. If you are one of our customers, this Thursday, we're going to go over the markets in great detail. Short class, but we're going to go over in great detail as well as the portfolios, any changes we may have made, how things are going here at Jazz Wealth with your investments. So we're going to do that this Thursday night. Grab a glass of wine with me, come hang out. Yeah, that's all I have for marketing. Let's get started for today. You got the Dow higher by over 500 points. That makes it the second best performing day of the year, which is, I'm sure a lot of you will take that. The S&P up 58. The NASDAQ recovered all of yesterday and some, gaining almost 200 points on the day. So we're coming out of the worst May in 17 years. We know sell in May and go away, right? You could sort of, validate that here. But the pullback has now really reversed. This is a really strong reversal here in the markets. And why is that? Why did the markets rally today? Remember yesterday we were saying there are 15 Fed members speaking this week, 13 Fed members speaking this week, and that doesn't happen. They just don't do that. They don't all go out in one shot and say, let's just all go give speeches and do all this great stuff. So 13 Fed members speaking, 3 yesterday, 3 today, right? 3 more tomorrow. And the Fed today started saying, hey, we would be accommodative if we have to with our monetary policy. We could ease. We could cut rates. I mean, it could happen. And that's what the markets needed. That is sort of that's what we said yesterday. These Fed members, they have an agenda. That when you notice something that's that odd, you got to recognize that and hopefully be able to, at least identify it. You don't have to necessarily do anything with it, but at least the markets have an opportunity. There's a catalyst there for the markets, and we got it today. So the S&P 500 rocketing back above the 200-day moving average. Very, very strong reversal. If you look at the NASDAQ, by the way, you can see just recovered all of yesterday's decline. Then that was no small decline yesterday. So very, very good reversal there. The S&P, by the way, erases 4 days worth of losses all in one shot. Just bam, big, strong day. It was a trend day, by the way, where the markets didn't trade in a range. They just started higher, went higher, and held higher. It was just a strong, strong day all around. So there's the NASDAQ we pointed out as well, recovering all of yesterday. The Russell 2000 even coming in on the game here. This sector has struggled. The key is the Russell 2000 hasn't had a good string of winning days, right? It just hasn't been able to put together a good string. Could this be the start of it? We'll see. Again, the rally coming because of the 13 Fed members, Jerome Powell, of course, the president, and some of the other Fed members saying that they would cut rates if they have to. You now have a 99% probability that they will cut rates sometime in the next year. That's what traders are pricing in. It's over 90% before September, before the end of September. So you've basically have people betting on a rate cut. Now, that's good news and that's bad news. It's good news now. It's bad news if they don't do anything or they start changing their language. So they really set the tone here today by doing that. In the S&P 500, you got over 53% of the stocks are higher by 10% or more on the year. So obviously still a lot of real good strength out there. That number bumped up a little bit today. Yesterday, and I mention this every day, I just try to point out how many stocks in the S&P 500 are above the 50-day moving average. It's a simple thing to look up. It's a simple metric to track. We were at 28% of the S&P 500 yesterday. We're at 38% today. So that fast, you have a lot of strong stocks that fell a little below the 50-day and recovered that fast. So today we're at 38%. That's crazy. You got 25 new 52-week highs on the day, which, when it's a big, strong day, you go, okay, well, that's impressive, but tell me, what does it mean? Well, you had 7 sectors in the S&P 500 represented today as far as 52-week highs. Just lets you know it was a broad-based rally. If you couldn't identify that by looking at some of the charts, or you just weren't wanting to dig deeper, you could say, okay, 52-week highs encompassed almost every sector out there, or a lot of them anyways, and so that's pretty cool. It's a broad-based rally. No new lows. Remember, we've been saying this market yesterday especially really wanted to bounce, but because of tech, it couldn't get anything done. I pointed out all the sectors to you that were trying to bounce. They did a good job, but were held back. So yesterday, we had 19 new 52-week lows. Today, 0. If you happen to track this, and it's some sort of a metric that you follow, you had 54 on Friday, 19 today, on yesterday, 0 today. You can start to kind of see that support coming in. And so all this stuff, you go, it's a lot of numbers, man. What are you throwing at me? This is crazy. All of it is because different people like to track the market in different ways. You may like to just pull up a chart and take a look and see what's going on. Some of you will look at the, sort of the breadth, if that's what you want to call it there, the underlying internals of the market. You may want to do that, and that's cool too. Some of you like to dig deeper. I just like to point out different ways that you can look at the markets if you don't like to use charts. But now I'm going to switch and go over to charts. So if we look at the individual sectors, semiconductors, your best performer on the day here. You had them recovering off these lows. It's kind of stalled. Yesterday we said it's nice to see that the selling has at least stopped. And today a nice rally. This sector has every reason to sell off, of course. I'll keep saying that. But it was your best performer today. Tech stocks. That's not tech. There we go. Tech stocks there up about 3% off the 200-day moving average. They got a little bit of a recovery today. If you look at the FANG names, Facebook, which was crushed yesterday, got a little recovery. That's a golf club. Amazon. It's not the symbol. This is how the show goes downhill real quick. Amazon 2%, but remember yesterday was crushed as well. So when you look up some of these stocks or you see them in the news, Netflix is going to be the one that stands out. Great recovery from yesterday. It's a whole sloppy mess in here, but out of the FANG names, that one did pretty good, 5% on the day. And then there's Alphabet, of course. Same thing. It was really hit hard yesterday. Nice to see a little recovery here, but I think it's way too soon for you to start saying, yay, we found a bottom. All right, oil, still lower on the day. I know the USO was higher, but the price of oil sold off on the day. Still sold off here. So still a lot of weakness in this category. It's up to you what you want to do with it. But just other than that, good stuff all around. Real estate pulled back a little. That's your interest rates, right? Interest rates finally took a little bit of a break, meaning they bounced. So the price of bonds actually pulled back a little. That hurt that. It also hurt utilities a little bit, but nobody's really complaining there. Those are still some of the better performing areas of the market. All right, let me look at a few other things for you here, and I'll take questions if you have any. Tomorrow, we got 3 different Fed members speaking, and the Beige Book comes out. That was already expected, though. Crude oil inventories, of course, as well. Manufacturing numbers early in the morning. Earnings-wise, you got, what do you have? American Eagle, Campbell Soup, Five Below, and Stitch Fix. Those will be your headline news sort of earnings there. Bemis, by the way, is replacing Mattel in the S&P 500, which interestingly enough, if you look at the best performer in the S&P 500 today, it was Mattel. It was up like 11%. But they're going to be replaced in the S&P 500 by Bemis. Mattel will be moving to the S&P 400 if that helps you in any way. IRS is investigating Uber for 2013 and 14 stuff. I think that's in the scroller below I put for you. Tiffany on earnings, and Caterpillar price target was cut by UBS, I believe. I think it was UBS. So I hope that helps you out there. There you go. Why'd REITs get smacked today? I don't know if you call that smacked. I mean, it lost 1%. It's not that big of a deal. It's holding near highs all in all. You could use any ETF to track that, but here's FREL if you want to follow it. 1% pullback there. And it's because your interest rates finally bounced. So what we're looking at here is the bond ETF. When the price of bonds falls, yields go higher, and that's all that happened today. It was a long run, very, very extended run. So totally cool, I think, for bonds to get a little bit of a boost there in the short term. So that was that one. REITs and utilities, by the way, were also weaker on the day. Yep. You get those comments from the feds. Cool. I think I got it. David says, historically, are returns higher in the long term of small cap growth, mid cap, or large cap growth, not worried about volatility? I think you're saying, are where's the better investment there? Where's the better return? It's actually the S&P 600 and then small cap from there. It's a very close second, I believe, over the last 30 years. Last time we did it, there's a class in the dojo, by the way, where we went through every single index. So you might start there because there was a couple that were really, really close. Or we could cover it Thursday too. Go back over that. Yep. Salesforce, yeah, they do report here, 4% on the day, and they did have earnings, I believe, come out after the close. They did. That was a killer stock. That was one of your stronger names there for a while there. Oh, we're still talking about 3M. Some of you guys are trying to buy this 3M. It's a good sign today, right? You like to see that recovery. It's still not out of the woods, in my opinion. The worst thing that you could see as the owner of the stock, but the best thing you could see, I think, as someone who's interested in buying or seeing it bounce, is nothing for a while. Let it calm down. When a stock sells off so calmly and collectively like this, you want to just prove to people that the selling has stopped. Look at the SMH, the way it sold off and stopped. You get people that go, oh no, it's not going to sell off any further. You get short covering. You also get people that decide they want to take a shot at the long. So in my opinion, if 3M would just go sideways for a while, that may attract more people. I'm not telling you what to do. I'm just saying. You loved having Josh on the program. Yeah, he's a cool guy, man. It was good to have him here. I'd certainly like to meet more people in a space like that, but they're hard to come by. Yeah. Good bounce on Tesla today. Yep, I would agree. That was about 8%, I think. 8% on the day, trying to recover. Still, I think it's hard to say that this is the bottom on stocks like this. But if you're long or wanting to be long, then you at least like what happened today. But I think it's way too early to just say, yep, that's the bottom. That being said, there's a lot of stocks out there that the way they reversed today indicates a bottom. That's a bottom so look at some of the better performers, in the tech ones especially, that sold off aggressively for no reason and then recovered all of it and then some. That's impressive. So there's some of that out there as well. Yep. Cool. Well, I think I covered it there. Not much, really, as far as individual news. Earnings season's kind of calmed down there, so just a handful of names. Tomorrow, it's going to be more Fed speak in the beige book. So just so you know, the whole Fed speak that we talked about yesterday, them helping support the markets, more of that is going to continue tomorrow. So we'll probably be talking about it as well. Yep. Your take on antitrust news going around tech stocks, you think it'll be a short-term hindrance? I think that your Google, Facebook, or Alphabet, sorry, these guys, it's just crazy what they're pushing in terms of this. Is it an issue or is it not? It is one of those things that makes headlines and then just kind of goes away. You go, what happened? Where did all this go? And I hate to say it, but I said it yesterday, it all stems from this political pressure. All the politicians are trying to find their talking point. And once they do find their talking point, they'll stick with it. If this happens to be a pain point, which so far it doesn't seem like anybody really cares, then eventually, or they'll stick with it. If it's not, then they'll just move on, go pick on something else, and the topic will just fall away. Did you see, by the way, I put it in the scroller, Tinder, which is Match.com, MTCH is the ticker symbol. Tinder, owned by Match Group, they now are being forced to provide all data, communications, and messaging from the Tinder app to Russian authorities because they're operating in Russia. Russia's like, okay, we want to see all the messages. We want to see everything that happens. They're being forced to do. Could you imagine that? There's some people on that Tinder in Russia, in the government or whatever, that probably shouldn't be on it in the first place, that are probably going to disappear. That would be pretty interesting to see, but I just thought that was interesting. Yep. Cool. I saw the comments about Biden and the tax cuts there. Yeah, we'll see. He's your front runner, I think. I mean, he's got the star power, so we'll see what happens. Can you do a video about Roth 401k in high tax states and it was worth it to be in a Roth or a traditional 401k? Like an example kind of a video? That's a good one. Yeah, I like that. I would agree. All right, I think that's all I have for you today. We'll be back tomorrow to do this all over again. If you want to play, guess the Dow. Go to the website. I swear to you, there's no catch to this. You could just place a guess next week where you think the Dow will close. That's it. I looked through a bunch of them today. I'm going to eventually give you all the stats on it without giving out names to let you know who's bullish, who's bearish, and all that. but a lot of people are bullish, so it's interesting to track that. But seriously, we're not going to spam you, call you, market to you in any way. Just a fun game to help us make it through the summer while things are a little bit quiet. And we really are going to give away $100 a week to whoever wins, and we'll announce them on the show every week. That's it. Enjoy the rest of your day. We'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.